What's up everyone? Welcome to another video. In this video we're going to be talking about the VIX, the volatility index, the put to call ratio, VIX Futures. And I want to talk about this one because everyone is calling for a recession to happen very soon. Everything that's bad for equities seems to be happening right now. There's a looming recession in Europe, an energy crisis. The Federal Reserve is trying to tame sky-high inflation caused by high commodity prices due to the Russian conflict, the Russian war in Ukraine. But most importantly, the Fed intentionally wants to slow down growth. He stated it. Jerome Powell stated it. All the Fed officials have stated it as well. Yields are still skyrocketing towards his target of 4.6%. The dollar index is skyrocketing with it. All of this stuff is bad for equities. And if you didn't already know about the VIX, when equities go down, then the VIX goes up. So let's see what the VIX is doing, because when the VIX spikes up in price, then that is usually correlated with a major dip in the SPY or even a stock market crash. You can see this big spike in the VIX that I've highlighted here. This was the crash of the pandemic here. And most importantly, I want to point out how it appears that VIX's price is breaking out above a long-term resistance, a downward trending resistance. That is a bearish look for sure. It looks as if the price of VIX wants to come up to these previous highs here, possibly meet these support levels I've highlighted in yellow. And I should mention, if we do get up to these previous highs, or even if we reach those support lines I've highlighted, then historically when the VIX reaches these historically high levels, then typically it is a good short-term or long-term buying opportunity in the SPY. Let me pull up the SPY chart and show you actually. Now here's the S&P 500 chart, and I'm going to highlight all those areas that correspond with those spikes in the VIX that I mentioned. Now those are the first four spikes in the VIX that provided very good buying opportunities, and these small rallies, bear market rallies, were the more near-term spikes in the VIX that you see that I circled as well. Now that goes to show you that these were very good buying opportunities when the VIX reaches these historically high levels. So keep eyes on these resistance levels on VIX futures. The lower resistance is around $36, $36.20. The higher resistance about $40.20, around that area. And as of right now, this thing does look like it's going to continue upward. We broke out of that long-term downward trending resistance that I mentioned. The only levels I can see that will be attracting the price are these levels, the previous highs on VIX and the two resistance levels that I mentioned a second ago. So watch all of these levels here on VIX futures. These are where you might possibly get a reversal, but things look very bearish in the market. We got Powell trying to fight inflation, which is going to kill growth. That's bad for the market. The only way to have growth is by incurring inflation. So the Federal Reserve does not want our economy to grow. That's a really bad look for investors. So it looks like we're going to continue to the upside, at least to meet these resistance levels. And you can see SPY futures chart how the price is near previous lows, right around that 364 or 363 area. So you might possibly find some support there, but this momentum to the downside is strong. So it looks like we're gonna come down to another support level lower than that for sure, it looks like. But then again, the market does whatever it wants, so pay attention to any positive news catalysts, pay attention to the news, economic data releases, and pay attention to your technical support and resistance levels, especially if there is a major news catalyst or a major news headline or global event that happens at these support levels. That happens often if you follow these technical levels, so keep an eye on that. But basically, everything looks bearish. The only bullish aspect to the S&P 500 is the very oversold conditions on the RSI and KDJ. So we might get a slight bounce, a slight cooling off of this downtrend based off the very oversold conditions you can see on some of these main indicators. But other than that, the trend is down. Do not fight the trend. it might be risky to get a short position after this massive run down this fast. The premiums are going to be very expensive. And other than that, just be patient, be careful, and that's all I have for the video. If you like what you heard, definitely hit the like, subscribe, hit the notification bell, leave some comments if you have any questions, suggestions, anything like that. And I'll see you on the next video.